National income accounting methods, aggregates of domestic income and national income, and important terms and concepts. Which are the methods of calculating national income? Value added method or product method, expenditure method, and income method. Which are the aggregates of domestic income? GDP at market price, GDP at factor cost, NDP at market price, and NDP at factor cost or domestic income. Which are the aggregates of national income? GNP at market price, GNP at factor cost, NNP at market price, and NNP at factor cost or national income. Now, we are going to see each and every aggregate of domestic and national income in detail. In the previous modules, we have gone through the important terms and concepts like normal resident, then economic territory, then what is macroeconomics, what is national income, which are the three important methods that we have seen in detail. Now, which are the aggregates of domestic income and national income? First one is GDP at market price or gross domestic product at market price. In the term itself, it is very clearly given, it is domestic product. It is domestic, it is an aggregate of domestic income, not national concept. So GDP at market price can be defined as the market value or money value of all the final goods and services produced within the domestic territory of a country during an accounting year. It includes depreciation, which is otherwise known as consumption of fixed capital. It also includes net indirect taxes. So, GDP at market price. Gross concept. It is a gross concept, it is a domestic concept, and it is at market price. So, each and every term is important. What makes it gross? Because it includes depreciation. Why is it a domestic concept? Because it does not include net factor income from abroad. Why is it calculated at market price? It includes net indirect taxes. So what is depreciation or consumption of fixed capital? What is net indirect taxes? What is meant by gross and net? That we will see in the coming slides. So, gross domestic product at market price is the total money value or market value of all the final goods and services. Intermediate goods are not included. And I have already given the meaning of consumption goods, capital goods, final goods, intermediate goods in the previous modules. Kindly refer it. The link will be given below this video. So, GDP at market price is a domestic concept, it is a gross concept, and it is at market price. So, it is the market value or money value of all the final goods and services produced within the domestic territory of a country during an accounting year. It includes depreciation or consumption of fixed capital and net indirect taxes. So, what is net domestic product at market price? When we deduct depreciation from GDP at market price, we will get NDP at market price. NDP at market price refers to the net money value of the goods and services, that is, final goods and services produced within the domestic territory of a country during an accounting year. What is an accounting year? The accounting year in India begins on 1st April of a year and concludes on March 31st of the following year. Okay, so the 1 year period, which is called the financial year or fiscal year, it begins on April 1st and concludes on March 31st of the following year. For example, starting on April 1st, 2021 and concluding on March 31st of 2022. So, how is NDP at market price calculated? GDP at market price minus depreciation. That is gross minus depreciation, we get net. Next is GDP at factor cost. That is gross domestic product at factor cost. Again, a domestic concept. It is a gross concept. Instead of market prices, it is measured at factor cost. What is factor cost? That is the cost or payment given to factors of production. Which are factors of production? Land, labor, capital and entrepreneurship. And land is given rent by the producers, and labor gets wages or salary, capital derives interests, and entrepreneur gets profit. So, rent, wages, interest and profit is the factor cost. It does not include net indirect taxes because it is the, what is GDP at factor cost? It is defined as the sum total of factor income including compensation of employees. What is compensation of employees? It is the compensation or payment given to employees for the services rendered. That can be wages or salary. Then rent, interest and profit generated within the domestic territory of a country during an accounting year. It includes depreciation. It is a gross concept. It includes depreciation, but it is measured at factor cost, factor income. It is not measured at market price. So, GDP at factor cost is equal to compensation of employees plus rent plus interest plus profit plus depreciation, or GDP at market price. Now you know what is GDP at market price. From that, if you deduct net indirect taxes, we will get GDP at factor cost. Next, we are going to see the net concepts of domestic income. GDP at market price and GDP at factor cost are gross concepts. Now, NDP at market price is the money value or market value of all the final goods and services produced within the domestic territory of a country during the period of an accounting year, and it does not include depreciation. Gross concept, gross aggregate, it includes depreciation. When we deduct depreciation from gross, we get the net concept. This is NDP at market price. So, it includes net indirect taxes. So, GDP at market price minus depreciation, we get NDP at market price. Next is NDP at factor cost. NDP at factor cost is the domestic income, or we can say it is the standard unit of measurement of domestic income. NDP at factor cost can be defined as the sum total of the factor income including compensation of employees, that is in the form of wages, salaries and all the sort of compensation received by the employees from the employer. Then rent, interest and profit, that is the income of factors of production. Which are the factors of production? Land, labor, capital and entrepreneurship. The income derived by these factors of production, it is called factor income in the form of wages and salary, which is otherwise called compensation of employees. Compensation of employees is a wider concept. We will see that while we are calculating national income by income method. Then rent, interest and profit. All these are generated within the domestic territory of a country during an accounting year. As it is a net concept, it does not include depreciation. It is measured at factor cost, so it does not include net indirect taxes. So, NDP at factor cost or net domestic income, it is called net domestic income. It is equal to compensation of employees plus rent plus interest plus profit. We should not add depreciation or net indirect taxes with NDP at factor cost. So GDP at factor cost minus depreciation, we get NDP at factor cost, or NDP at market price minus net indirect taxes, we get NDP at factor cost. Next, aggregates of national income. What makes the difference between domestic income and national income? That we have seen in the previous module. It is net factor income from abroad that makes the difference between domestic income and national income. Domestic income plus net factor income from abroad gives us the national concepts. So, the first aggregate of national income is the gross national product at market price. Gross concept. So, it includes depreciation. It is a national concept. So, it includes net factor income from abroad, that is NFIA. Then it is at market price. That means it includes net indirect taxes. So, gross national product at market price refers to the sum total of the market value or money value of all the final goods and services produced within the domestic territory of a country during an accounting year. It includes depreciation or consumption of fixed capital. It includes net indirect taxes, and it includes net factor income from abroad. So, GNP at market price is equal to the domestic concept of gross income, that is GDP at market price plus net factor income from abroad. So, what is GNP at factor cost? It is measured at factor income. And it is again a gross concept, it is a national concept. So, it includes depreciation, it includes NFIA, but it does not include net indirect taxes. So, it is very easy to calculate GNP at factor cost if you have calculated GNP at market price, because GNP at factor cost is equal to GNP at market price minus net indirect taxes, or the domestic income, that is NDP at factor cost plus depreciation, you will get GDP at factor cost plus NFIA, you will get the national concept, that is GNP at factor cost. So, GNP at factor cost is equal to domestic income, that is NDP at factor cost plus depreciation, it will become GDP at factor cost plus net factor income from abroad. The domestic concept will become national concept, or you can calculate in an easy way GNP at market price minus net indirect taxes, you will get GNP at factor cost. Next is net national product at market price. It refers to the sum total of the money value or market value of all the final goods and services produced within the domestic territory of a country during an accounting year. Please take care, kindly write market value or money value of all the final goods and services produced within the domestic territory of a country during an accounting year. In other words, it is the sum of NDP at market price or net domestic product at market price and net factor income from abroad. So, NNP at market price can be calculated in different ways. One is NDP at market price plus NFIA, that is domestic income, net domestic income at market price. To that, if you add income from abroad, net factor income from abroad, you will get NNP at market price or GNP at market price minus depreciation. You will get NNP at market price. So, when you understand the basics, that is, net does not include depreciation. Gross includes depreciation. Domestic concept does not include NFIA, but national concept includes NFIA. Market price includes net indirect tax, but factor cost does not include net indirect tax. If you learn these basics well, you can derive any aggregate of national income from the given aggregate. Next is the standard measure to identify national income, that is net national product at factor cost. This is the final concept of measuring national income or the standard measure. It refers to the sum total of factor income including compensation of employees, rent, interest and profit generated within the domestic territory of a country during an accounting year, or it can be defined as the total of net domestic product at factor cost and NFIA. So NNP at factor cost is equal to NDP at factor cost or domestic income plus net factor income from abroad, or NNP at market price minus net indirect tax. You will get NNP at factor cost. Through short modules, I am explaining the important terms and concepts of national income accounting, the three methods of measuring national income, then what is the difference between gross and net, domestic income and national income, market price and factor cost, and the very important terms like normal resident, domestic territory, different types of goods and services. So in the coming modules also, first of all, I will complete the important terms. After that, we will start the calculation of national income. Please subscribe and share. While you watch the channel, please don't forget to press the bell button and kindly share the link with your friends, and we'll come back with the more concepts of national income. Thank you.